Hey, it's Clay Trader, and this will be a video chart on ticker symbol MEMP. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. While this may look like several days worth of time right there, it's actually just today's price action broken down into 30-minute time slices. I like to this time frame. I think it does a good job of telling the quote-unquote story of the price, and then makes mapping out levels of support and resistance a bit easier to see. Not here to state the obvious or rub salt in anyone's wounds, but pretty brutal day here. But after the opening bell, the bulls did show some signs of strength and has presented a pretty interesting setup. Now, I fully realize that if you bought before today, then there's really nothing I can talk about that would be bullish. So when I use the terms bullish or anything of that nature, I'm talking about after today's price action. And the main component of that is, the price actually went sideways. If you've been trading long enough, I'm sure you've seen, stocks where they gap down, but then after they gap down, they just pull one of these numbers where they continue to bleed and bleed and bleed the remainder of the day. That was not the case here. The price actually did go sideways, which is a sign of bullishness. Maybe that you're saying, well, that's setting the bar kind of low. Well, yeah, given the context of things and how nasty it started off, sideways action, as far as I'm concerned, is just as good as upwards price action. So with that out of the way, let's just kind of map out some levels of support, because like I said, when the price started to go sideways, that did kind of shed some light into where some buyers are sitting. Ideally, going forward, you want to see the price hold up above 51 cents. That is essentially where this higher, sideways base was. Yeah, it dropped down here a little bit lower, and I'll talk about that in a second. But, then after this afternoon, price did a good job of staying up above that the remainder of the time. So as far as, what would make this setup look the healthiest going forward from the long side, that is, price staying up above 51 cents would be the ideal level. 48 cents, though, is a must-hold level for the simple reason that if the price drops below 48 cents or worse yet starts to separate, well, then that just puts the price putting in new lows. And obviously, a bullish move, if the price is trying to, bottom out and bounce, well, bottoming out prices don't go lower, right? I'm assuming I'm stating the obvious when I say that. Now, as far as levels of resistance are concerned, let's map out a couple of these hurdles that the bulls are going to have to clear if any sort of continuation on the bounce is going to, unfold. The initial hurdle that's going to need to be cleared if there's going to be any sort of hope at all of any sort of continuation is right there at 59 cents. And then after 59 cents, next level of resistance up there at the 67-cent mark. So we'll see what happens with it. Like I said, no guarantees of any sort of bounce. I wish the market was that easy and I could say that just because it went sideways, this is for sure going to bounce. But if it does bounce, keep an eye on these levels of resistance, and we'll see what happens with it as the week unfolds. One of the most popular questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together this free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then by all means, click right there to get access to the guide. The guide itself is very short and to the point, and like I say, it is free. Thanks for watching. Have a good one.